Today, we're exploring a financial strategy known as equipment sale-leaseback funding, a method that allows businesses to unlock the capital tied up in owned equipment while continuing to use that equipment in day-to-day operations. In this arrangement, a business sells its equipment to a leasing company and immediately leases it back. The leasing company first evaluates the equipment to determine its fair market value. Once the value is agreed upon, the equipment is sold, and the business receives the funds up front. A lease agreement is then established, allowing the business to continue using the equipment in exchange for monthly payments over a specified term. At the end of the lease, the business may have the option to repurchase the equipment, renew the lease, or return it. This solution is especially useful for businesses seeking liquidity without interrupting operations or taking on traditional debt. Let's consider a real-world example. ABC Manufacturing, a mid-sized industrial machinery company, was experiencing a temporary decline in orders and needed immediate capital to fund new marketing campaigns. Rather than pursue a traditional loan, they chose equipment sale-leaseback funding. They sold their CNC machine and robotic assembly line, appraised at $300,000, to a leasing firm and entered a 5-year leaseback agreement. This allowed ABC Manufacturing to receive $300,000 upfront, which they invested into marketing initiatives to boost sales. They retained full use of their equipment throughout the lease and had the flexibility to repurchase it at the end of the term. Key advantages of equipment sale-leaseback funding are access to immediate capital, improved cash flow, flexible lease terms, continued use of equipment, and no risk of depreciation. However, businesses should be aware of potential drawbacks, such as loss of equipment ownership, higher overall costs compared to traditional financing, long-term lease commitments, limitations on upgrades or modifications, the need for strong creditworthiness. And the typical requirements include equipment details and proof of ownership, appraisal report, financial statements and tax returns, business plan and credit history, and insurance coverage. Equipment sale-leaseback funding offers businesses a strategic way to access capital tied up in essential assets without disrupting operations. It allows for greater financial flexibility while maintaining productivity. If maintaining control of your operations while gaining financial flexibility is a priority, this option may be a strategic path worth considering.